I want to see a trend. I want to see a market that goes either up or goes down. I want to see some movement, right? So anyway, so again, I want to just let you know that you can go ahead and type in any symbols that you'd like me to take a look at a little bit later on. But as of right now, what I'm going to do is I'm going to introduce our very special guest. And again, I'm going to reintroduce her. Many of you know Stephanie Link from RealMoneyTheStreet.com. She makes a she's one. Actually, let me step back a minute. I will tell you this right now is I've had my experience over the years with fund managers. Back in the day, in the late '90s, when I was running pension money, I was in charge of roughly $200+ million of pension money. Basically, the managers who managed the money, right? And back then, you know what, we could talk about all to the ends of the earth about performance. But for me, what it was all about was it was a qualitative profile. What I did is I screened a lot of managers. I interviewed hundreds and hundreds of managers. I fired many of them because they didn't meet my criteria for a qualitative manager. And that, to me, is the most important thing. It's not all about the numbers. It's all about what your attitude is, how you perform, and what you're doing to achieve that performance. And I will flat out tell you right now, I would put Stephanie Link up there as one of the top best managers I have ever seen. And again, I interviewed hundreds of managers from across the country, and you know, I was very picky and very selective on who could manage the money for me. Okay, she is someone who works extremely hard. You see it in her writings for Action Alerts Plus, and you could see it the way she talks to people on CNBC, whether it's on a radio, whether she's doing a video. You can see the effort and the hard work that she puts into her job. She takes it very seriously. She's a very competitive person, and you know, I'll tell you something right now. If I had money to give, I would feel more than comfortable to have her manage it for me, as I'm sure Jim Cramer feels the same way too. So without further ado, I'm just going to go ahead and introduce Stephanie right now. She is with us on the other line, and Stephanie, go ahead and talk markets if you wish.
Thank you so much, Bob. That was a really very nice introduction. I will tell you this, that the one thing that I have always kind of kept very seriously in my mind in terms of running money or just in general about the markets is always staying very humble. And you can be right on a lot of things, but the one thing that goes wrong always kind of bothers you, and it makes, hopefully it helps to make me a bit better of a portfolio manager. But right now, in talking about the markets, you know, there's just a lot of uncertainty in the market right now, especially as the U.S. economy has stalled in the recovery in terms of jobs and manufacturing, and that really started in March, and we've seen a steady decline, minus the data today, but I still found some holes there today we can go through if you like. Europe obviously in a deep recession, and the data from earnings really just has confirmed that. Several companies, even the very best of the best, have said how hard and challenging Europe is. And we know that China is slowing as well. And in fact, I just got off the Cummins conference call. I read the transcript, and I wanted to be positive. I feel like I really understand the truck cycle. We've been involved in that kind of name before. And honestly, listening to what they had to say was kind of depressing. So all of that is kind of strange that we're at Dow 13,000. You would think we would be at Dow 10,000, you know, just given all the macro. But you know, the good news is this: there's a couple things that I point to. The global governors and governments are easing. And this is actually a very exciting week because we get the Fed tomorrow, as Bob mentioned. We get the ECB on Thursday. But you've had Brazil; they've been easing already. You have India; they're seeing the slowest growth in GDP in 9 years. So they have got to do something. I think you're going to continue to see this as a big theme throughout this year and into next year, and that kind of sets you up better for 2013. That said, you got to have some pretty ugly numbers for the monetary policy to stay easy. But I do think you're going to continue to see that, and we'll learn obviously more tomorrow and the next day. I would say this, that expectations are quite high. I don't think the Fed does anything massive tomorrow. I hope I'm proven wrong. But I think that they could extend twist, but I think maybe more likely September you get something should the data continue to be bad. I do think you're getting all kinds of language out of the Chinese officials that they're going to continue to certainly do what they have already been doing, and Europe naturally needs to do something very, very aggressive. Other good news, earnings actually not so bad. I know everyone's focused on revenues being weaker than expected, certainly disappointing, but that's not surprising given the macro of what's going on in the global markets. And I would say this, that 67% of the companies are actually beating on the bottom line. So they don't have the revenues, but they've got the margin control, they've got the expense reductions going, they're doing individual kind of quote-unquote self-help things that can actually help to